The next point we have is what Warren Buffett talks a lot about in the stock market, which is dollar cost averaging. And for those that are unfamiliar, what he talks about with dollar cost averaging, take for instance Coca-Cola. Okay, and a lot of people are worried, when the stock market's up, should we sell because it's gonna tank, or when it's down, people are scared that the whole world's gonna blow up and it's just gonna continue to go down. His thought process is to remove the psychological and mental barriers from investing, right? And he does a very, very good job of that. But he talks about, if you find great assets like a Coca-Cola, if you just buy, no matter what the market does, you buy it when it's at the top, you buy, maybe a little bit less when it's at the top, maybe not, but in a lot more when it's at the bottom. But if you just buy, right, no matter if it's going up or down, it's going to average out. And your stocks are going to continue to rise. Your average is going to continue to rise because the U.S. stock market rises considerably over time, right? If you look at charts. And if you believe that the U.S. is still going to be here as a country and still going to be growing in 20, 30, 50 years, then why not invest in its blue chip stocks? That's his motto, right? And so we take that a little bit into consideration in real estate, right? If you think that in 20, 30, or 50 years, that U.S. real estate is still going to be one of the best asset classes in the world, which it is right now, then why not dollar cost averaging, continue to invest in dirt in the United States?
Yeah, I mean, when you think about trying to time the market too, if you look back, like say you were looking at buying a house in like 2017, you're like, maybe I'll wait because, market's kind of high, it might go down. It was here and now it's here. Like
Yeah.
you just don't know. It could, there's a lot of opportunity you could have missed out on if you were just waiting for a market crash. So,
yeah. And I was investing back then, right? And I had those thoughts. I had those exact thoughts. That's why I stopped flipping, because I was like, man, the market's way too hot, But in retrospect, there was no better time to flip than in that 16, 17 period, right? And, and so I wasn't wise enough to do that. But I digress from that. The point is that even if we hit a, serious 20% decline in the real estate market, it probably won't go back to that 16, 17 marks, when I was really involved with that. And so it's generally a good time, especially with what we do, to invest in real estate. If the numbers make sense, if you can live for free, right? And you get in good areas with low down payments, your money's going to come back so quickly, right? My brother is buying a duplex right now. And, we were talking through this as well, but with the low cost of entry to get in with an FHA at 3.5% down, you get that money back so quickly, right? And you live for free. You build so much confidence. You build a track record, which is more important, in my opinion, than anything when you're young or when you're a new investor. There's nothing more important and nothing that gives you more credibility than having a deal or two, right? When I see it all the time. And so, in our opinion, it's a fantastic time to invest.